You know, it has been a very, very quiet weekend. Not a whole lot going on in terms of price. Volume is one of the lowest volume weekends we've seen in a long time. And the good news, at least, is that tends to lead to high volatility in the market, which is what people want. And hopefully it's something that can move us the right direction this time. And I want to highlight everything going on this week just so everybody's got their calendars marked. I want to talk about a comment from a viewer and really address what we're going through right now and what some people are missing. And we also need to talk about something that institutional money just acknowledged. So if you guys are new or haven't already, show your support for the channel down below. But let's just dive right into it here because ADA is actually getting just a little bit lively at the time of filming this video. We were sitting just below 42 cents right before I started filming, getting a little bit of spike here. It's about 6:45 a.m. Central Standard Time, but it's been very quiet this weekend. I think most of us can acknowledge that. There's not a whole lot going on. ADA just continues to hang around the bottom of this inner channel like we've discussed in our big descending channel. Understand that ADA has the possibility to move all over this thing, right? We could, if we hit the week, normal Monday, red in the markets, we could see ADA try to push again back down towards 39.5 cents, 40 cents, kind of hit support like we did back here on the basically last weekend, right? And try to create a bounce from there. ADA is at least showing some pretty good structure in these ranges, some pretty good demand there. At the same time, if things get exciting, if some of this data that we get causes capital to re-enter the market, you could very easily see ADA try to attack this 20-day moving average at about 46 cents. You can see us try to attack the top of this inner channel, which would be about 47 cents. And our entire channel altogether is about 48 cents. All right. So that's kind of the big range that everybody needs to watch very closely here. It's about 39.5 cents to 48 cents. It's a 20% range because we're again down in those prices where 8-cent movement is 20%. Okay. And I don't know which way things are going to head, but it's been really quiet. All right. $81 million over the last 24 hours. I'm sorry, $81 billion over the last 24 hours in terms of market volume is very quiet. Last time we saw things this quiet was, oh gosh, what day was that? It was like the start of September. There was one day that was $77 billion, September 6th. And then we obviously saw a little bit of excitement following that. Prior to that, we're talking all the way back in April, right before things got very, very lively and exciting in the crypto market, coincidentally enough, right as we were setting our market bottoms. And then we saw the market rally out of basically the crap hole it was stuck in. And that's what we've been stuck in, is kind of a crap hole throughout the space. We're waiting for, BTC to confirm this bounce here. Is this a relief rally or is this the start of, again, a potential V-shaped recovery? I know some people have said that that's not V-shaped, but sure looks like a V to me. But we'll obviously have to wait and see what happens again as the week progresses here. You could see BTC try to attack 94K. That would obviously cause some liveliness in terms of ADA. BTC is trying to drop down to support at about 87K. Market's not going to like that. ADA wouldn't like that. But here's the thing: is this is the stuff we need to pay attention to this week. Monday, Jerome Powell's speech going to cause volatility in the market. Going to talk about QT ending. All right. Maybe they'll give some insight into what the Fed's path forward is. We know they've been quietly doing some stealth QE, injecting liquidity to banks. I mean, we'll see if that's something that's going to expand very rapidly. I know last time this took place, it started very slowly, and then it just kind of surged as we got into COVID. PMI data is going to be coming as well. ISM manufacturing. Wednesday, we have additional PMI and ISM data. Thursday, initial jobless claims and the U.S. trade deficit. And Friday, we have PCE inflation data. And one thing that I think everybody should be aware of, I'm sure some people have questions about this, is GDP data. It sounds like it's delayed indefinitely. So that's something that I think a lot of people were waiting for to see what that was going to look like if we actually had a strong quarter in Q3 or not. And it may have been a bit weaker of a quarter, and maybe that's why they're not releasing the data. But yeah, right now, no timeline for that to pop up in the news. Now, that being said, there was a comment from a viewer that I did want to talk about here. I think it's worth addressing. This is from Emery3161. Appreciate the comment. He said, I've been hearing the same bullish narrative for years now. I'll give Luxide Crypto credit. The endurance is impressive. Appreciate it. But at what point does expecting a huge move start sounding less like patience and more like denial? There has to be a threshold where it's coming becomes insanity. So I appreciate the comment. And Here's the thing is 2025 has been the strangest year of this market cycle. It's like I showed in the charts the other day, is that 2025 has not been a year dominated by retail. It's really been your enterprises, your institutions, your governments doing most of this stuff throughout the year. It's the big reason why we haven't seen, these big, massive, exciting pushes for ADA, for other assets really in the space. Yeah, there's been a couple that have kind of popped up out of nowhere, VC-driven projects. People have chased, they've mooned, they've dropped, right? And we can name countless ones that's taken place on throughout this market cycle. But ADA has performed its best when retail excitement has been high, when there's been positivity in the crypto market. 2025 has not been the year of that, right? We have not seen a push like we saw in late 2023 or late 2024. And here's the thing is this market cycle has played out how I expected from the things standpoint, but not from the price standpoint. And the big reason why, like we've talked about time and time again, is no new retail adoption. We're still stuck at 6% of the world. We have not expanded in terms of retail users in the crypto market on a sizable whole, right? Yeah, I'm sure there have been some people that have called it quits and moved out of crypto. Yes, I'm sure there are a couple people that have, snuck in along the sidelines. Hey, people, that crypto thing, it seems kind of cheap. Maybe I'll buy, right? But what this market cycle has been driven by is institutional players, enterprises, and government. And if you guys have followed me here on the channel for a while, a couple of years ago, I was talking about would not be surprise me if they slowed things down, really held back retail adoption, got their products and services in place, and then started marketing to the masses. And again, we've seen some bits and pieces of that marketing take place lately. Well, how about this one? BlackRock says Bitcoin ETFs are its top source of revenue. This is exactly what we were talking about. A $1 trillion asset manager saying, hey, this new product is where we're making all of our money, telling basically all their buddies, hey, you should launch ETFs. We're making a crap ton of money off of this, right? And that's the thing. It's always been about, or not always been, but this cycle has kind of been about those big players getting into the market, getting their stuff in place before a massive marketing event, we'll call it, before they really do trigger retail adoption, where they force retail adoption. And that's where, again, I don't think that a huge move is denial or insanity. It's something that's coming. It just hasn't happened in the timeline we expected, because again, circling back, retail adoption has been slowed down, right? It's been basically non-existent. All right. So it's something that will come again, but it's going to happen on big players' terms, if that makes sense. They're taking all this time to get all their stuff in place before they try to send the market. But that at the same time doesn't mean we can't have these exciting, we'll call it even euphoric pushes currently, because what we're still dealing with in the market is a lot of capital just still stuck on the sidelines. And actually, before I even extend into that, I want to remind everybody that if we're at this time where we're not seeing new retail adoption and we're stuck with the big institutional players and enterprises, right? What are the big things that are going to drive their activity and their accumulation? Well, tech is one, right? But also accessibility. And guess what? ADA spot ETFs. Institutional players are letting you know, hey, this is what we're going to be buying. This is what we're going to be trading. These are the services that we're offering. And yes, there's obviously a bunch out there, but this is a reason, again, why ADA can thrive even during these times, okay? Now, again, ADA's always been retail driven. It's always been the one that seems to perform much, much better late in market cycles than early in market cycles. Obviously, this market cycle has been just completely different, not altogether. And I think TechDev actually made a very interesting post here. He said, many think the cycle has topped something months ago, but what if we're halfway, right? With the parabolic phase yet to begin. This cycle's uniquely glacial pace is confounding many. Time can shake as many as loose as volatility, if not more. What the hell am I saying? I can't read this. Time can shake as many loose as anyways. I don't even know what he's trying to say there, but the point he's trying to make, and this shows kind of the business cycle versus BTC. It shows that we, again, are kind of at this moment where the market's going to need to make a decision. And it's that decision of, hey, like I talked about, do we fall into a shorter term, not as deep bear market, or do we in fact rocket out of here and start making all these people that were stuck on the sidelines start chasing assets again? And again, I don't know which route this is going to go. It's very possible we could go the explosion route. We have enough positive catalysts, I think. There's enough in the news cycle to make this happen. But again, I don't control the markets. I don't tell it where to go. I will say it's very promising that open interest has stayed low. Again, we're still at this point where ADA could close this first week of exchange inflows since all the way back here in late February. But that again, typically is a sign right before we have some exciting movements. So that's kind of my thought. No, I don't think I'm crazy. No, I don't think it's insanity or denial. I think right now a lot of people are missing what's taking place on the bigger picture, and we're conveniently forgetting the big thing is that has not been present in the cycle, that has not gone away forever. All right. So that's all I got for you guys. I appreciate you. I hope you enjoyed the video. Let me know your thoughts below. This one got a bit away from me in terms of time, but I'll catch you guys in the next one. Take care.